I'm going to do a little back testing that shows you kind of how I trade. So here's the drawings right now, but I'm going to go ahead and delete them. Let's see, and then we'll just kind of form them together. All right, now let's go to NQ, get rid of them. So we just start this fresh. Okay, so I watched ES, NQ, and YM side by side. Now, to get my trade idea, I watch for sequential SMT on the 5 minute. So we just had a big run after the news that came out at 10 a.m. Now, at this moment here, there's a pullback between NQ and ES. And at this moment, you'll see that NQ formed a lower candle body close. And I'm going to show you that. So right here is where NQ formed a lower body candle close. And then if you notice on ES, at that same candle, it was above its candle body low. And I'll go into a little more detail there. So the idea comes from a 5 minute candle body low or a significant low that happens within Q4. So this significant low is here. Okay. Right here. And then this significant low on NQ is here. Okay. And then what we'll do is mark it out to watch it. And then when you're within a new 90-minute period, you just watch for this low to be violated on either asset. Now you see it violated here with a candle body close. It has to be a candle body close. So the candle body closes here. Now at this moment, I'll mark out SMT. So the SMT I'm looking for will happen on the 5 minute time frame within sequential 90-minute periods that are on the day quarterly theory indicator. Okay, and then I'll mark it out. So this is a bullish SMT, and you got to mark it out on the same candle at the same time, which is that. Now you see this 5 minute candle closed above. This indicates that the strength is here in ES. So what I would be looking for is longs now from this exact moment. So I'd like to go into a 1 minute time frame now that we have that marked out. And let's just see where cool entries would be. Now we have a fair value gap here. Okay, so the SMT formed around here. Now I also like when SMT forms, I like getting in below the formation candle body or the formation low. So this is probably the low of that wick. Now under it is the FVG, so all this is viable. Now you can see that this low is not violated. Even if it is violated, that is fine because it could just be a liquidity grab. I'll still treat it as I want long positions. I would not treat it like I want short positions. But what you could do is you can set stop losses by looking at recent swing high, swing low, just and then put a risk reward fib on it. So you could have your stop loss at the -1. Okay, stop loss can be down here. Just to kind of know like, okay, well, I was wrong on that one. That's where you would risk. Now, one thing that we see here is if you compare NQ, so NQ did violate its low. It had a low here. It grabbed it. And that's fine too. It still flipped bullish. So if we go here, it flipped bullish right after it grabbed that liquidity. I like calling that SMT liquidity because this candle body was formed by SMT divergence. So I would like to consider that low to be an SMT liquidity, which that's a big liquidity grab and it tends to be able to provide nice bounces. So now if you compare these two candles right here, you have a red candle on the 1 minute, and right here you have a green candle. that indicates potential change in delivery of price. So you can treat this one as an order block. You can buy here in this order block. Okay. And you'd want to target possibly, let's get rid of this fib. You'd want to target the equal highs, right? You also could target, so in this, you could target these next two highs, actually next three highs. These are like low resistance liquidities. This is kind of like a trend line, right? You could target all three of these. Okay. So depending on how many contracts you have. So now if I'm buying at this order block, and like I said, I like buying under the sequential SMT candle body low. Okay. We're buying this order block, and that's a great value. You're now getting about 3 or 4 handles to get to the relative equal highs. And then up here, you're getting about 6 handles to get that liquidity. And then as you see, you could be taking profit right here. Now it's still bullish. This whole time it's still bullish. So I'm still looking for possible reentries. You have a fair value gap here. Okay. You already see that NQ changed its state of delivery after taking liquidity. Potentially, here's a volume imbalance and a fair value gap right below it. So between these two candle bodies, there's a small gap. So that's a volume imbalance. But for SMT, it is nice to play the ticker that failed to do a lower low. That shows more strength. Okay. Now, when to get out of this? Let me show you when to get out of this. So this idea is invalidated when the next bearish SMT happens. So I'm going to show you where that happened. So now it happened only if you compare YM. And like I said, I look at 3 different tickers. So if I switch over to YM here, so you can see that this whole idea got invalidated right here at the break of this high. So this is another 90-minute period, right? And then we're in another one. So at this point, we can start looking for either more bullish SMTs or bearish SMTs. So bearish SMT would indicate that you should get out. So here we have this high to this high. This is an SMT. The idea is based on the candle bodies that got violated. And these candle bodies that didn't get violated. So what you have here is SMT. This is a sign of bearish potential reversal, that this could be like a turtle soup, and you get bearish price action. Now, what I like to do for exiting is, if you see it, you can exit right there. But typically, the moment that you see it on that candle body, it will usually give you a chance to exit. As you see, that candle body closed. This is where the violation happened. And you could put a limit order here to sell it, right? Okay, so this is your exit limit order right there. Okay, that's the point where you just exit your long and look for the next trade. Or if you do have a bearish bias, then you could potentially choose the weaker asset, which in this case it was YM. Okay, to look for, if we drill down on the 1 minute, we find our bearish idea spot. Oops, undo that. Okay, we find our bearish idea spot. Okay, it happened here. Now you have fair value gap, right? You could enter at the fair value gap getting tested. Now, if you notice, when this fair value gap is getting tested, this is where your bearish price level is getting retested. So the bearish SMT price level getting retested, that is a choice bearish entry. And as you can see, it's being retested. It's hitting a bearish fair value gap in YM, and then you go down. Let me show you where the targets would be for that. There were some equal lows on YM. Check this out. So this SMT happened. Look where you could target. That's just too clean. Okay. It ended up hitting here, hitting up another fair value gap, and then delivering to a new low of day, which is kind of cool. And that's about it. So this is an example of how to enter bullish SMT and how to get an idea of where to exit on bearish SMT. Let me know if you have any questions.